Hello, everyone, and thank you for joining us for the 100th episode of the Financial Commute. It's special for a couple reasons. Not only is it our 100th episode, I can't believe we've been doing this for 2 years, but we also have a special guest speaker, Grant Williams, author of Things That Make You Go, the Grant Williams podcast, and also co-founder of the Real Vision Group. Grant, it's such an honor to have you here on this podcast today, celebrating our 100th episode, but also the fact that you're going to be a keynote speaker at our symposium in October. Thank you so much for joining us.
Well, look, thank you for having me, and congratulations on 100 podcasts. That's I know how that feels. That's a big milestone. It's a lot to do, and so congratulations on that. And yeah, I'm really looking forward to the symposium in a few weeks' time. It's going to be a really good day. I can't wait to meet everybody, and there's so much to talk about. That's the good news.
There is so much to talk about, not only from investing, but also the political environment. We've got an election going on, and just the interesting things that are happening in the world. Now, you have a podcast that's titled The End Game, and it speaks to a number of these different things that are going on there. And you get to speak to some of the smartest people around the world to talk about what the potential end game might be. Can you share with us a little bit about the purpose behind that podcast, and then some insights that maybe you've taken away from that?
Yeah, sure. Yeah, I mean, I do that with my co-host Bill Fleckenstein, who's an absolute legend. He's a lovely guy, and he's been around a long, long time, and he's a very, very smart man. So we set out to try and figure out how this kind of period ends and what comes next. And it's interesting. I think our second or third guest was a good friend of ours, Mike Green. And the first thing he said to us, he said, "Of course, you realize that the game never ends." And he's absolutely right. The game doesn't end. But what we're trying to figure out, as I said, is we've had this period of extraordinary monetary policy that kind of started with the Bank of Japan back in the late 90s, early 2000s, and it spread out around the world out of necessity, not out of any great planning on the part of central banks. They've kind of done everything they can to keep things together. And we all knew going into this that there would be a finite lifespan where this policy would be effective. We kind of knew that there would be inflation as a result. We got rampant asset price inflation. We didn't really see the goods and services inflation until the kind of COVID turbo kicked in. But now we've kind of gotten to the point where if we're not at the end, we can probably see it from here. So, Bill and I have been just trying to pick people's brains to find out how they think we kind of transition from the world that we've come to know over the last 20 years, which is a world of kind of central bank backstops, easy money, low interest rates, abundant credit. How do we transition to the opposite? When interest rates start to go up, which obviously we've seen them do, it tends to reverse just about everything in the financial universe. When we start to see credit get tight, we start to see asset prices come under pressure. And we haven't seen that yet. But these are all the things that we have to be prepared for rather than expect to observe on day one. The clue was in QE. Everyone said there's going to be inflation. And of course, we didn't get it for a long, long period of time unless you were looking specifically at financial assets. So just because something hasn't broken yet when they've raised interest rates to 5% from nothing doesn't mean that something's not going to break. So really, what is that going to be? How's that going to ripple outwards into the financial system and beyond?
And most people don't realize that central banks around the world weren't doing this for fun. Like, there were fundamental problems in their economies that caused them to have to force interest rates to be zero, print trillions of dollars. And now kind of the only way to get out of it is a couple ways from I see, if we're going to speculate about it. You can raise taxes, which nobody wants to vote for, or you can let inflation sort of run to where you wake up one day and you go 30 trillion, that's not that much money, which is just silly.
Well, it's silly, but it's a tried and trusted way of dealing with this. We've seen this throughout history in various periods of time. The interesting thing, what you said there about people don't want to vote for tax increases, and of course they don't, but nobody ever does. The tax increases always happen as a result of a massive fiscal shortfall, and we've seen where we are. So we know really that the reality is taxes are the government's only income. So the only two ways to fill that hole are to raise taxes or to cut expenditures. That's literally, they're the only two options available to them. And I think we're more likely to see the former than the latter because everyone has become so conditioned to to expenditures going up. And of course, governments have had access to cheap financing for so long now, so they just got into this habit of spending rather than cutting back. So just because we don't vote for tax increases doesn't mean we're not going to get them. We've just seen a government change here in the UK. And pretty much the first order of business of the new Labour government here, which is, if you're an American and not familiar with how the British system works, the Labour government that's just come in is essentially a left-leaning Democrat type party. And the first thing they announced was a supposedly $20 billion shortfall in government finances, which, quote unquote, may result in us having to raise taxes, even though we promised we wouldn't during the election. So, this is how these things happen. And I suspect we're going to see a lot of that. We're going to see a lot of attempts by governments to raise their revenues. We saw, obviously, all of us saw the Kamala Harris tax plan laid out in black and white the other day, which kind of spooked a lot of people in financial markets. But this is a need. This isn't a want by the governments now. This is something they need to do. And so I've used this quote so many times since Jeff Gundlach said it to me many years ago. He said, there's one thing more powerful than greed and fear, and that's need. He said, when you need to do something, you don't have a choice. And that's kind of where we are. We're at the need stage of this. And so the mindset for investors has to change to, okay, if the government needs to do this, unpopular or not, what are the policies that will solve this problem for them? And how might those policies affect my investment portfolio? Because that's kind of the phase we're going into.
Yeah, that's very thoughtful. I mean, inflation's also is just a hidden tax. It causes people's dollars to be able to buy less goods and services, which is not too different, but it doesn't solve the issue with government debt and government spending. You write an article that we look at religiously that's titled "Things That Make You Go, Hmm." And based on that sort of title, what's causing you to go, hmm, today?
Oh boy. Well, I'm 15 years into writing that particular piece. And it's funny, I was talking to someone just last month who were asking me, I said, how do you go about doing this? And do you struggle to find someone to write about? And I'm like, no, I struggle to eliminate things not to write about. There's so many things every month that are worthy of kind of further thought and investigation. So I try to just find something that I think is interesting and important, dig into it, and hopefully give the readers an understanding of why this is important and what it might mean for markets, for governments, and for them as investors. And so, recently I've written about Japan a fair bit in the last couple of years, because I think Japan is an important place, and there's some important things going on in Japan right now which are definitely going to ripple outside the financial system. I've written about gold a fair bit. I think gold is a very important part of every portfolio.
So do
at
we.
just about
we
every
love
point.
we love
Yeah,
gold.
and that's been borne out now. Which is, and it's interesting because to a lot of people, it's a matter of the price, and the reality of it is it's really not the price. And I'm actually going to talk about this at the symposium, and try and help people understand why the price of gold is really not necessarily what you need to look at when you're considering it as a place in your portfolio, which is doesn't instinctively make sense to a lot of people. But once you kind of explain gold's role in a portfolio, you begin to look at the whole financial world in a very, very different way by placing gold at the center of it in the way that it's meant to be. So there are, I've written about the UK government. I've written about so many different topics in the last year, but two of the ones that have really resonated with people, and again, this is part of what I'm going to talk about when I come and talk to you guys at the symposium, is this idea of reflection on the part of ourselves, and trying to understand who we are. Are we an investor or are we a speculator? Because what I found in talking to people over the years, and it's gotten more pronounced over the last kind of 4 or 5 years post-COVID, as this kind of gambling mentality has really kind of lit a fuse under not just markets but retail investors, is to go back to basics and really ask a question. Who am I? What are my goals here? What am I trying to do? What am I trying to solve for? Because a lot of people think they're investors, but really they're speculators, and vice versa. And it doesn't matter if you're an investor or a speculator. There's a place for both in financial markets. But thinking you're one when in reality you're the other, and you behave in that way, can be really problematic for how people manage their assets, manage their portfolios. And so, you know, subjects like that are really interesting ones to explore with people, because you find it's very easy to sit and talk about a stock pick or this idea or that idea, or we think the dollar's going stronger, or gold's going higher, whatever it may be, and that's great. But really understanding who we are helps us then decide what to do with that information. What does the dollar going up mean to an investor? Well, it means something completely different to what it means to a speculator. And so understanding those differences is a really crucial foundation stone for everybody, I think.
I love the way that you phrase that. I mean, we talk a lot, not only in our quarterly letters and just sort of the media stuff that we put out to clients, about having the right mindset and the right strategy. It's not just about having the right investments, the gold, the real estate, the physical assets, and then also being exposed to the traditional markets. It's having the right mindset as to the decisions you make, how you react to them, why you're doing it, and then having that long-term view of investing as well. Because being a speculator can be dangerous when you need to live off your portfolio, because you might make
Exactly.
the wrong reaction emotionally, because those dollars mean something to you in terms of what you want to do in your life and beyond.
Yeah, beautifully put. That's exactly it. And that's where we are in the cycle now. And people just need to have an understanding of what their aims are, what their objectives are. We've had a period for 15 years where you could just play flat out offense. You didn't need to play any defense. You didn't really need to be careful. We've seen some scary periods. At the end of 2018, we saw a scary period. COVID obviously was a big wake up call for a lot of people. But realistically speaking, you've been able to just buy and close your eyes, and buy the dip, and everyone's become accustomed to doing that, and it's worked really, really well. And the point I made in a presentation I gave last year was that if you've been in the markets, you got rich, even by accident. If you just had money at work in the markets, there are all-time highs, you got rich. But now is a time where you need to think about staying rich. And I don't use the term rich pejorative. I'm just trying to make the point that your net worth has increased, and there does come a time when there might be an opportunity for further gains. But does it make more sense to chase them at this point, or does it make sense to reorganize your portfolio so that you maybe participate less in the upside, but you're protected on the downside? And that's it's an important shift in mindset for people to make, but it's a difficult one because they're surrounded by friends who are still in the all-out offense mode. And you get cautious, and you put more gold in your portfolio. I mean, gold's doing okay because it's at all-time high, so it hasn't really hurt you. But you get more defensive, and you feel good about it until your neighbor, tells you that he bought those Nvidia calls and they tripled overnight, and people start to second guess short-term decisions, and that's just comes back to this idea of understanding if you're an investor or a speculator. If you're a speculator, then these short-term shifts, that's what you do. So you might well completely change your portfolio the next day and reverse position. That's totally fine. But if you're being an investor and you do start to get cautious, and you do try and take steps to eliminate downside risk in your portfolio, you have to get comfortable that that is not a decision you've made for the next week. That's a longer term decision designed to protect you from something that might not happen tomorrow, but there's an increasing chance that it does, and you want to be ready for it. So again, this mindset is so important for people to understand.
Yeah. And, valuations matter, the price at which you buy something at. But also right now is a really interesting time because it's been 15 years since the credit markets created some attractive opportunities. Now,
Yeah.
I know that we've been exposed to private credit, whether it's through real estate or other asset-backed stuff, for many years. So we've been able to generate, high amounts of income for people during a zero interest rate environment. But like right now, and you can buy a short-term US Treasury bond and get 5.3. You've got short-term credit, fixed income that's, yielding in the mid 6s to 7s, and you've got some private credit in the 9 to 12 range. That's an attractive place to
Yeah,
be considering where valuations are.
absolutely. And suddenly a portfolio of short end treasuries, fixed income, maybe a little bit of private credit, depending on your risk appetite, and some gold, suddenly it actually looks almost like a kind of sexy portfolio, which nobody would have thought several years ago, but things change. And of course, you are getting paid to wait, and you are getting paid to be cautious. And the trick there is to understand the credits that you're exposed to, and your duration risk, which is very different to the world that we've lived in, where it has been a lot more focused on the kind of an equity culture in terms of number go up and buying stocks and looking for the price to go up, and looking for an expansion in multiples rather than an improvement in the business. And what tends to happen when markets reverse direction and start to go down is the quality of the business matters a lot more than the share price. And people have kind of gotten away from that, but we tend to find out which companies are in robust shape pretty quickly when things reverse.
Yeah, those are great points. I mean, things that we feel very strongly about here. It would be difficult to have this podcast with you and not bring up the elephant in the room in terms of what's going on around the world with the political shifts. You have some interesting feelings on, how the pendulum swings. And right now we're in this just sort of environment where people are voting for the other person, not because they necessarily believe in the policies, but they have to vote that way because it's just not the other person, right?
Yeah.
And you also believe that as time goes on, it'll shift back to a more normal situation, and it's not so much do or die, where the world's going to end if this party wins, or the end of America as we know it is going to end if this person wins. What are your thoughts around that? I'd love for you to kind of share some of your perspective.
Look, it's such an important topic, but it's such a charged topic, which is a shame, because it's something that we all need to be able to find a way to discuss. And your point is absolutely right. The people are voting for they're voting for one of two things. They're voting for our guy versus their guy, or they're voting for the other team because this team have done such a terrible job for me and my family. And that environment is a very difficult one, thanks to things like social media, and thanks to things like the media, which has a clear bias in most countries. This is not, I would encourage people to understand, this is not an America-specific thing. This goes far beyond the US. It just so happens that the US is the biggest and most important election in the world, and it gets the most coverage both domestically and overseas. So we have this situation where whichever side comes in and wins these next elections, we've seen this happen in the UK just now. We've seen France go through it. We're about to see the US go through it. Whoever wins, it's going to be a poison chalice. There is a time when you kind of don't want to win, because you're going to be handed a very poor set of options. And I think that's what's going to happen to whoever wins in November. I think the narrative that it was Trump's to lose and now it's Harris's to lose is probably not going to turn out to be correct. I suspect there'll be some twists and turns between now and early November, like there were back in 2016, particularly. And I don't think this election is a foregone conclusion by any means. And that's going to be difficult. I think the one thing America really wants is a landslide victory from one side or the other. It's the only real way to avoid any nasty post-election claims of an election being stolen. And the closer it is, the more divisive it's going to be. I just don't think we're going to get a landslide victory. So people need to be prepared in the wake of the election, whichever team, I think of it sports time, whichever side loses that election, not necessarily the party, but the supporters are going to feel very angry about losing it, because at various points in this last year, each side has been told that their candidate is a shoo-in to win it. So I think we're going to see plenty of turbulence around this election. We've seen in the UK as a forerunner, we've seen in France as a forerunner, to give you guys a sense of how these things are going. we've seen an awful lot of kind of unrest in France around their elections. We've seen a lot of riots and social unrest in the UK in the wake of the Labour victory. Now, they weren't necessarily political riots, but the tensions that have been stoked leading up to the election and the problems that have built up with regards inflation and the unaffordability of living here in the UK, it doesn't take much for any kind of spark to start people out in the streets. And while we might have a riot, we had a riot in working class areas of northern England over a particularly gruesome murder, it brought people out on the streets very, very quickly, and it had immigration, inflation, all the hot button topics were all wrapped up in this. And so I think people need to be prepared that there's a lot of anger, there's a lot of unhappiness, there's a lot of frustration at rising living costs baked into the cake already. And politics is, unfortunately, while its goal, I guess, is to kind of ameliorate those feelings of unrest, it tends to agitate them, particularly around election times. So people need to be ready for that.
And the emotional side of that is sometimes they take their view of what might happen with these elections and how it affects their investments and want to make some decisions based on that. What are your thoughts about making long-term investment decisions based off of a single election or a point in time throughout the year?
Well, it's such a great question, and it's such an important question. I think that the key thing for people to understand is, if you think that the outcome of this election particularly is going to result in wildly different outcomes for your portfolio, you're probably mistaken, because of what we talked about earlier about the things that these governments are going to need to do. No matter who gets in, they're going to have to find a way to persuade the public that we have to do this. And if they can persuade them, great. If they can't persuade them, they're going to have to force this stuff through. So I suspect that Democrat proofing your portfolio or Republican proofing your portfolio is an important thought exercise to go through, so that you have an understanding of the likely policies and how they might affect you. But I suspect the reality post the election is going to be much closer in terms of outcome for investors than you might think. We would certainly have more problems with the Kamala Harris tax plan that was unveiled this past week. If that gets put through, I suspect that will soften over time, because if it doesn't, I think that's going to be a disaster. So I wouldn't think that would go through as it's mooted. But I also don't think that if Trump wins, you're going to get the kind of tax cuts that maybe he's intimated he's going to deliver. So the reality is constrained. And there's a great geopolitical analyst, good friend of mine, Marco Papic, who's just gone back to BCA, bank credit analyst, and he talks about looking at the world, particularly if you're trying to figure out what politicians are trying to do, through constraints and preferences. And they all have these preferences, the things they would like to do, but they have constraints around them. And the constraints that are kind of encircling politicians everywhere are just coming closer and closer and reducing the availability of preferences to them. So if you start to think about constraints and what politicians won't be able to do, I think that's a really good starting point.
Yeah. Grant, thank you so much. I know we've unpacked a lot here today, but you're also going to join us at the symposium to go a lot deeper on a number of these topics.
Absolutely.
I love how you shared, the mindset around making decisions and recognizing who you are between being an investor or potentially a speculator, and the importance of really playing defense in an environment like we're in today, just because of valuations and the unprecedented amount of debt that the world, economies have. I'm so excited to have you join us here for our symposium in October. And thank you so much for your time today.
It's been a pleasure. And again, thanks for having me. Congratulations on the 100th show. And I'm really looking forward to seeing you and everybody there in October.
Yeah, perfect. Thank you so much.